want to welcome everyone here tonight. Hello, I'm Rick. Welcome to the Hit and Run Candlesticks Right Way Options public e-learning tonight. Appreciate having everybody here. Appreciate you bringing your friends. Excuse me. All right. I don't want to spend a lot of time yakking tonight. I'll try not to do that. I would like to look at an awful lot of charts. We'll try to keep this about 55 minutes. Yeah, I'll do my best. A couple things I want to remind people of. Sorry, I've got some notes here. A couple things I want to remind you of, that if you are a member, remember to log into the members room, and if you want to download the app, the Pro Room app, this is a members only app, remember to do that. Just want to remind you to do that. That's probably we'll get that out of the way, and then, all right. Let's think about some charts here. Okay, so, and I'll do my best to answer questions. If for some reason I skip over your question, it's not because I did it on purpose, I promise you that. But sometimes if the questions come really fast, I only get to see just a little bit of the chat. And my screen's just a 27-inch monitor that it's on, so, it's as big as it can be. So please don't think I ignored you. Please ask me again, okay? All right. One thing I want to remind everybody is we are in the middle of earnings, so be very careful. We can talk about earnings more tonight, but I think it's very important for everybody to be very careful of earnings. I've gone most of my trading career avoiding earnings, not wanting to trade through earnings. And I still think it's the best thing to do, is just don't go through earnings. In my opinion, earnings is just a great big gamble. And it's really stacked against you, because I know that everybody here has seen a case where a company reports good earnings, but yet their stock is down. And a company reports poor earnings and the stock is up. I'm telling you, it's stacked against you. It really is. So be a little careful through earnings. The other thing I want to say is I was making a few notes tonight, and I've been sitting here for about an hour just sort of looking at charts and piddling around. And I want to remind everybody that not everybody wins at the same time, okay? We have seen in the trading room where I've seen people make money on today or even this week, and I couldn't find a great big red barn out in a field when it's all by itself. I'd walk around, couldn't find it. And vice versa. I've made money. I've known people that have made money in any given week, and then some people that are really good traders. I mean, I respect these people, but yet they don't make money. And that doesn't mean they're a bad trader. I just want to remind everybody that not everybody makes money at the same time in the market. You just don't. And if you did, it would be kind of, I don't know, it just wouldn't be very fun. I don't know. It just wouldn't be. I just don't think it would be. So let's see. Brocco's saying, hey, Rick, with everything that's going on with the virus, do you think it's at all logical for the market to be going up? Or is this just a head fake before the next leg down? Great question. Great question. Great question. I've talked to a few people about this over the phone, and no, I don't think it's logical, Brocco, but I think what's happening is, when I say I don't think it's logical, let me talk about me. I think that I'm human and I actually have a heart opposed to Wall Street. And because of that, no, I don't think the market should be going up. I think this is a horrible time right now. It's a sad time. There's stories that just, it just make you cry. It just makes tears in your eyes when you hear some of the stories. So no, I don't think it's logical. But then again, have you ever seen? And I'll just say the government. That's who did it. I don't mean anything good or bad by it, anything. But have you ever seen the government put what $7 trillion in the market? So, do I think it's logical? No. $7 trillion is a lot of money. Now, do I think that dries up? Yeah, I do. I do not personally feel that we're going to continue to go up. I think at some point, personally, I feel we're going to come back down. Now, is that my heart talking? Maybe. I just can't imagine, malls being closed down. I can't imagine the businesses that are shut down, the people that's out of work. The fact is that there is a humongous amount of people that live in nice neighborhoods, nice homes. They drive nice cars, but yet if they don't get their paycheck, they have to go get food. Now, when you think about all that, at some point here, the market, I think, will just poof, and we're going to see that next leg down. Now, I could be wrong. I really could be. And I've learned some lessons in my history of trading, my lifespan of trading. And one of the lessons I've learned is not to predict, and let's just trade the chart. I think we have to trade a lot more careful. I think we have to trade personally with less money invested or at risk. We just have to be much more cautious, and I think we can make money. I mean, that was the title of tonight. Yes, you can make money in the market. There's people here in the market. There's one individual, Malcolm. Malcolm, he said I could talk about him. In 9 days, he has increased his entire count by, what was it, 29? Let me double check here. 29. Yeah, 29%. That's amazing. Thank you, Malcolm. That is amazing. That's not one trade. That's his entire account. That's some losses, I'm sure, and some winners, but he's put it together. He's done it, follows his rules, realizes that he's going to have some losses and some winners, but, you put it together, and what do you know? You've got a fantastic peach cobbler. Hats off to Malcolm, and hats off to the other folks in here. Money can be made. You have to follow a few rules. You have to have a game plan. I know everyone hates to hear that. Everybody hates to hear that. Everybody hates to hear about these rules you have to follow. But it's true. You do. Okay. So, all right. I'm backing up and getting some questions here. Let's see here. Again, if I skip over you, I'm not doing it on purpose. Please retype it below, okay? Let's see. Amen. What are the moving average? This is just the 20 simple and the 50 simple. That's all these are. Excuse me. I want to, I can come over to this chart, and these are different moving averages. I can come over to this chart, and that's different. We can go to what we call a naked chart, and there's no moving averages. I want to remind, thanks for that question, though. It's important to understand it's not the indicators that's magic. It's what you do with them that's magic. It's not the indicators themselves. But we'll certainly talk more about that. We're going to look at charts here in a minute. Let's see. I think after it hits, Chris is saying, I think after it hits 50% retracement, down is where we're going to go. I think it's already hit 50% retracement, Chris. If we come up here and take that top and just go down to that bottom, this is the 50% retracement right here. So we've already surpassed that on the SPY, the Qs, and the diamonds. Whoops, I don't have that on the diamonds. Let's do that. So the diamonds were right at the 50% retracement. So we're right at that level on here. And I'm not disagreeing with you, by the way. I'm really not. I think we're at an important level, and I think there's still chance for it to roll over. Just because we blew through it and just because we closed over it doesn't mean anything. If anyone knows anything about my trading or my reading of charts, whether you like it or not, this is what I do. I don't look at, what is this, 293.39 is the number. Nah, 50% retracement to me is in an area. It's not a single line. The markets don't move in absolute prices. So I agree with you. I truly do. But the market's not ready to go down yet. And if we put this chart back up there, and let's get rid of this, you can see we're getting awful close to the 50-day simple moving average. So that's another area that I think could cause us a little grief. Not only that 50% retracement area, but the 50-day simple. So let's keep a tight eye on it. Let's see. Our economy is consumer driven. Without consumer spending, how can the economy get going? You're right, Richard. I agree with that. Let's see. I'm going to skip down. I don't want to debate the virus or anything like that. Let's see. Okay, Daryl's up 10% in his count, maybe over 10 trading days as well. Congratulations, Daryl. I mean that seriously. And thanks for posting that. And anybody else that could post something, please do that. Because you know what? There are people in the room that are not making money. And they're wondering what they're doing wrong. Or why can't they do it? Well, I want to try to help with that. And let's get to it. Now, if you received an email or something, I told you I had 63 charts I wanted to pass out to you. If you guys go up to the folder at the top of your screen, if you go to that folder up there and you click on it, I think you'll see it's the very last one posted. It should be the top one. And it should be a PDF on, and there's 63, I think there's 63 possible charts to take a look at, and we're going to go through some of them tonight. I'm just going to start at the top of my list, and I mean this is just my list right here, the ones that are flagged, and let's talk about them. Let's ask some questions, and let me see what I can do to help. Maybe I don't know, maybe that aha moment, something like that. Okay, so thanks, Ken. After I typed 63, I got to thinking, was there 63? I know it was 60 something. So anyway, again, I want to remind you, we're right in the middle of earnings season, which I think is not good. I don't think it's a good plan to be in earnings. We're in the middle of this pandemic, this horrible thing that it's causing us a lot of problems, a lot of things that don't make any sense, and it just we have to trade cautiously. So whether you like those 63 or not, whether you find other stocks or not, remember, your number one goal right now is not to make money. It's to preserve what you have. Now, if you can trade a little bit, if you're making a little bit on the side, that's great. That's great. But like Daryl or Malcolm, not everybody is going to win at the same time. Not everybody is. And that doesn't make the loser, the person that doesn't win anything today or this week, doesn't make them a bad trader. This happens all the time. I've never met Daryl or Malcolm personally, but I'll guarantee you that they would say they've had some losses. It's just that they know how to put their plan together, and they're able to work through those losses, work on those winners, be a better stock picker, and follow their rules. And that really is where the answer is. So let's see. It says 63 stock picks or something like that. PDF 63, guys. It's what it says. For those, let's see. Thank you, Steve. It's very kind of you. I've been with Noom. Been here in HRC for a few months now, learning and paper trading. I just started trading with real money and have been doing well with Rick's teachings. Thank you. Very kind of you. A plan, discipline, and practice, and I believe you can succeed. Thank you. Thank you very much, Steve. I'll get your check in the mail. Let's see here. It's kind of hard for me to keep up here, guys. Let's see. I removed my P&L day trading day to focus on charts and not P&L. That's true. Yeah, focus on the charts, not your P&L. That'll kill you right there. Just looking for target zones versus profit percents and losses. Just want to share that. Thank you very much, John. Appreciate it. Let's see here. Gwen, thank you, Malcolm. I just didn't sell everything when the market tanked. Most have come back and gave me a 36% gain in 9 days. I'm telling you, it works out there. It works out there. Yeah, thank you, Alan. It's a 3/8 trap list. Okay, maybe that's all right. Yeah, that's what it is. 3/8 trap list. All right, let's take a look at something. Let's take a look at some of these. Okay, so speaking of the 3/8 trap, by the way, we've been doing. I say we. Doug has been doing these 3/8 trap classes, and we keep. There's only 10 people allowed in the class, and the reason for that is to keep it personal. Keep it personal. That's probably the biggest thing. Make sure that every question gets answered. He works very hard at that and very hard at explaining the class. He calls me up today. He says, "Rick, I've got people asking, can we do the class again?" So, yep, absolutely. We haven't even got it published yet, but May 19th, we'll send a note out. But it sells out in just hours. I mean, it really does. And what I'm gonna do is show you some charts, and if you're interested in the class, then you'll get it. But we'll get it out in the next day or two. But May 19th is when it's going to be 2 p.m. in the afternoon Eastern time. Let's see, where is it located? It's online. It's in one of these rooms right here. In fact, it's actually in this room. It just passworded. So, all right. So let's take a look at some of these. What I've actually done here is a trap within a trap, and some of these charts aren't going to be this way. Some of these charts will actually be over the 50-day simple moving average. But what I've done is I've said to myself, all right, I looked at the SPY. And I'm a big believer that 85% of all the stocks follow what the S&P 500 does, and I use the SPY as my S&P 500. So I looked at the chart and I saw, okay, I could see where price was moving up over the 20-day simple moving average, and usually when I see such a thing like this, I look for that higher moving average or that resistance up above. Excuse me, a second here. Thank you. So whenever we, this type of situation where we're down and we come up to that 20-day simple moving average or any major moving average is what I'm looking at. We come down and we break out, and then when we closed over it, that gave the go-ahead where we're over that 20-day simple, and now I'm looking for a trade, overall trade to the 50-day simple moving average up here. I'm not saying it can or cannot go higher. It doesn't matter to me if it does. All I'm looking for is that space right in there to trap price in that space. Now, at the same time, here, let's look at a chart. Let's take RCL. So, like I said, 85% of all stocks follow what the S&P 500 does. So if the S&P 500 is between the 20 and the 50, I want to look for stocks in the same area. So we have a scanner, the LTA scanner. This is what produces them for me. And so I'm looking for the first trap. Now, what the 3/8 trap, that's the trap that the class that Doug teaches. So let's go to a different chart, same chart, but a different chart setup. I'm going to go to a different chart. There's my 3/8 trap, and that's the black line and green line. Don't worry about the dotted line at this point. That's not important. What's important is the black line, the T line, and this is the 3 EMA. And you can see how it's nice and tight in a trap. Now, I'm not saying that every one of these 63 stocks is ready to be bought. That's not what I'm saying. I'm saying these are 63 stocks that have possibilities. They also have short possibilities because when you're in the trap, what we're looking for is that follow through. Well, there is a chance that it starts, whoops, wrong color. There we go. It starts moving down. And that could keep us in that trend to the downside. So these are 63 stocks that all fit that criteria. I've not vetted them anything past other than they meet my criteria. In the trap is the number 1 criteria, the number 2 criteria, which they do not all fall in this criteria. Not all. Many do, but not all. Some have broken out of the 50, but yet they're still in the trap area. So now I gotta tell you, I'm pretty tickled. In the past couple of years, I've increased my account pretty good, pretty amazing. In fact, I have to actually look at it twice sometimes, pinch myself. I have to thank my good friend Doug there for enlightening me on options. I'm not trying to talk anybody in options, but I just don't believe you can make these kind of numbers in just stock trading, but you can still make a very good living in stock trading. But in the first 3 months, to date, my account has doubled more than just a little bit more than doubled, $1,000, almost $1,000 more than doubled, and it's this is a very typical chart pattern I use. Even in an RBB setup, I still look at this whole trap setup. It goes back to the T-line. A lot of people go back a few years, and when I created the T-line and all that stuff. I mean, that's what this goes back to. If you look at it, there it is right there. There's another one. There's the T-line, the dark line. There's another one right there. There's another. They all go to the T-line. That's where it all starts at. So these are charts that potentially could really make some money, but you have to have some rules, simple rules. Make sure just because they're in the trap doesn't necessarily mean they're a buy. You want to make sure that they're in a trend here, and which they're almost always in a trend when it's set up like this. But what I meant to say was that diagonal trend line here. We want to make sure if you want to increase your odds, then wait for it to move into this area. Then you can look for that buy signal that might give you the buy. And for God's sakes, put a stop in there. Put a stop in there. In this market, don't fuss around with it. Don't fool around with it, okay? Just don't do it. Put your stop in there. I know for a fact, I used to do a lot of training. I would, fly to people's homes and do training. And I got to tell you, guys, we're the world's worst. I'm telling you this. What guys will do, and I say guys because I find that ladies, they're not as bad about this. They're willing to say, all right, look, I've lost my money. Here's my stop. I'm out. I'm willing to admit I'm wrong. Guys have a tendency, to find every reason in the world to move their stop down, and they just keep doing it until they get to a point where they realize, holy crap, I'm down how much money? And by then it's too late. Then it's too late. I mean, you can get down to a point where I can't sell it now. I have to keep it. There is a point where you get down so much you can't sell it. Oh my God. You've got to do everything you can to work out of it. And I'll tell you, that's hard work. That's some serious lifting. So for God's sakes, use a stop. And when you're wrong, you're wrong. This market will eat your lunch, by the way, if you're not careful right now. Let me make sure I get some questions here. Malcolm, I can't make these numbers without getting, excuse me, without getting naked or using a gun. Oh, let's see, AB. So two criteria. No, okay. AB. That's for this. Yes, but now you have to remember that a week from now, that may not be what's going on here. The main criteria, I want you to look at the trap, and I'm not going to get into any huge details on it because we just don't have time. But what we're looking for, if you look at these charts and you take a minute and you don't look at, oh, I'm going to trade that one tomorrow, or that one looks hot. Don't look at that. Don't look at that. Just look at charts. Just look at the chart. That's all you do. And pretty quick, when you stop worrying about a stock pick or you stop worrying about, a trade tomorrow or anything like that, you'll start seeing things. Let's go to a naked chart here. You'll start seeing things. And maybe some have already seen it. I don't know. But here, I'll draw it. You see that consolidation area? They all do that in some form or fashion, some better than others, no doubt. Man, that's what they do. Look at that. I mean, they're there. Whoops, what is that? Right there. And they all have this type of movement to it as well. That type of movement. And one of the best patterns out there to trade is when a stock rallies up, it pulls back, and what do you want? You want that action right there. That's the action you want right now, right there. Well, we're giving you the first two pieces of the action. Now, we can guarantee that these two pieces are set up right. I mean, you're just asking the scanner to pull them up. That's no trick. But you're going to have to come in here. You're going to have to set that plan in place. You're going to have to wait for that right time, and make money as it goes up. And if it starts to move down, you've got to have what it takes to say, okay, whoops, I'm going to take that $1,000 loss. Why? Because it sure as a heck is better than a $3,000 loss. Or you're going to take that $100 loss because it sure is better than a $300 loss. And sometimes, also remember too, when you do this, and if you have 1, 2, 3, maybe 4, 5 losses in a row, I like 3 myself, maybe what you need to do is step back a little bit. Maybe what you need to do is step back a little bit and say, hold on. What's going on here? What's going on? And maybe you need to evaluate yourself or evaluate the market. Maybe the market is in a position where this is not a good market to trade. So you've got to know when to back off. I guarantee this, that if you step back a little bit, just for a day or two, the market will come back into play. And sometimes you've got to take yourself out of the bullpen so you can get back in time with the market. Sometimes we get a little bit out of time. I get out of time all the time. Out of time all the time. And when I do, I've just learned to say, okay, hold it. Let's get back in time. So I just have to take a breath. I have to look at the market. I have to say, you know what? I made a mistake getting in that position or that position earlier today or yesterday. So I'm just going to get rid of them. Take the loss, walk away, take that breather, get back in time. That's all you have to do. Instead of push, push, push. But anyway, just look at these charts. Let's see here. And you can see these charts. They all have the same thing. You know, they're all there, just like that. Every one of them. And it you know, that's the beauty of the scanner. The scanner just spits them out left and right. Some are a little prettier than others, no doubt. No doubt. But anyway, all right, I'm going to quit doing that for a while. So let's see. And Ken says he lost money because he didn't place his stop. Ken, I wish I had $1 for every time I did that. I'd be pretty doggone wealthy right now. I'd be in Fat City is where I'd be. So yeah, and that is unfortunately that's probably one of the top 5 reasons traders go defunct is because they don't put that stop in, and they're not willing to take that smaller loss when they're wrong. So I see Johnny L. That's a good ABC 1 2 3 setup. Absolutely, Johnny. I love that. ABC 1 2 3 J hook. You can call it. You know, we can all call it whatever we want. Thunderbolt. I mean, it can be. It could be. I don't know. Bend over and look up. I mean, it can be whatever you want it to be. But this is what it looks like. And, you know, that is a terrific chart pattern. And then we look for that consolidation, and then we make money if it goes up. And if it starts to move down and we get stopped out, we get stopped out. Now, we have to ask ourselves sometimes when we get stopped out, why did we get stopped out? Maybe we bought too far away from support. I mean, let's face it. If you're using this as support right here, but you bought it up here at 5, don't worry about the price, okay? It's just a chart. If you bought it up here at, well, here. If you bought it up here at $10 and support is down here at $5, well, you just might have bought it too far from support. That's your bad, all right? If the market is not in time, for example, we look at the SPY here, and let's go to this chart. 50-day simple moving averages here. So there we go. So price comes up, and again, I'm not saying that this is what's going to happen tomorrow, but let's just work with me here. Price goes up, and maybe the next day the price does that. Okay? Now keep that in your mind. Not a pretty sight. Not pretty at all. Then we look at a chart like EQOR, and here is our flat trading, and you're trying to fight this upstream. And you lose 3 trades in a row. AJG. You know, you look at this, you think, hey, I'm going to buy that. Remember what the SPY's doing. And you're determined to trade this long. Well, that's your bad again. You know, why fight this when the bigger bear is out there trying to eat you? So make sure that you're in time. What's the overall market doing? Make sure you're in time. There's a time to be long. There's a time to be short. So let's take these stocks. Now we've moved up here. If I start seeing a sell signal in here, I'm going to look at, in many of these, I'm going to look at possible shorts. So if we see this start to move down, I'm going to watch for that, and then I might watch for, excuse me, follow through. I mean, if, doggone it. If we come down and break that trend line to the downside, Well, we've got some areas that we might run down to, just like that. Okay, so I don't want to be all long here. Shorts too. Let's see here. What defies the T-line? Bruce, it's the 8 exponential moving average. 8 exponential moving average. Man, I apologize. Had a huge dinner, a lot of pepper. I think I have a pepper in my throat. Let's see, DR, or doctor there, is considering the coronavirus, do you trade what you see or what you take in consideration that a lot of these stocks should be moving, like RCL, which is not generating any business currently? I trade the chart, DR. I trade the chart, but in times like this, I'm much quicker on the profit button or the loss button. I'm much quicker. I don't make nearly as much money in markets like this. Dang, I apologize, folks. Yeah, I don't make nearly as much money, but I trade the chart. So the truth of it is, outside of some of the popular names, the truth of it is, sometimes I don't even know what they do. It doesn't matter to me. Now, maybe a little bit more right now. Okay. I think, well, geez, I don't want to trade that. But that's an emotional thing, not a chart thing. But generally, I follow the chart. I hope that answered. You have a good question there, and I hope I answered that. Let's see, what's the offset of my 3/8 trap? Okay, yeah, great question. Thank you. I use my 3, I use a high. So if I come over here, where's my 3? There it is. So I see it's a 3, it's the exponential, and it's the average of the high opposed to the close. Now, or last. But I think both are good. I think the close is the original. That's I think most people use that. I use the high because I want to make more of my decision in here rather than have the chart. For instance, if I wanted to look at this chart, I don't want those lines to be blurring me. And having it measured on the high, for me personally, and remember, I'm an area trader. If you know anything about me, I trade an area. For instance, if somebody says, well, this is a buy at $38.50, honestly, I just want to go pour hot scalding water on them. That is one of the dumbest statements I ever heard in my life. But I hear that often. This is a buy at $38.50. Where'd that come from? To me, it's a buy in this area. It's got nothing to do with an exact price. So, I can just flip through charts and I can see it in the chart, and I want that area. So that's the reason I do that. It does tend to give me a few more to choose from, which in some cases is not a good thing for some folks. But that's really why I want more to choices, and I want that area. I want that area. But when it really comes down to it, the majority of the buys, they're still that nice tight. And if you look at the 3 on the last price, they're all within that area or just slightly above. Yeah, Brocco, they all look similar, and it works. And here's what's funny. Do you know that I would venture to bet that all the retail stay-at-home traders probably look at the same doggone chart. They really do. There is no magic to it. The magic is tightening up your rules, tightening up what you're looking for. That's all it is. It really is. But I guess if you don't know what they are, then you need to know what they are. So can we look at Apple? Sure. Apple. Let's see. Can we look at rising Apple and then Netflix into earnings? Well, first part, earnings, I personally would never trade earnings Eric. I think it's a crapshoot, and yeah, I'd be careful. Okay, so right now I would never buy Apple at this level because it's up way too much. It's up 1, 2, 3. A gap is 4, 5 days. No way in the world would I buy it. On the other hand, if you own it, what you want to do is make sure you put that stop in there. Be very diligent on raising your stop up. I mean, if you bought it down here, and if you're a long-term holder, your question is null and void. The question doesn't matter. You know, if you're buying it and you know, Apple's going to be your kumbaya stock, your motorhome, your yacht, you know, you and your honey take off to the Wablu yonder, then your question makes no sense whatsoever. If you're a trader, like I said, I wouldn't touch that with a 10-foot pole right now, earnings or no earnings. It's just been up too much. And that is my absolute bottom line on Apple. Netflix is the same way. If you own Netflix, hang in there. Raise your stop. You get into earnings, though, I'd collect my money. Well, there would be no questions about it. None. On the other hand, if this is your kumbaya stock and this is your retirement, and you're going to keep it for 10 years, again, your question doesn't matter. Who cares? Right? So I think these two are horrible trading stocks at the moment for an entry. I think they're two wonderful stocks overall when they come back to your trade. I hope that helped you. Yes, this is being recorded. Yes. Yes, it is. I had to check. Do you have a rule of thumb to correlate the underlying stock price movement with an option price? Okay, Bill, here's my thing with options. First of all, I want to say this, and I want you to take notes, and I want you to think about it, okay? And it's a great question. Thank you for asking. This is for everybody. Because I get asked this often. And here it is. I only use options to leverage my money. Period. Flat. Outside of that, everything is done on the chart. Everything. So, there might be times on an option when I'm down 20, 25% on the option. But on the chart, it's not. Now, that took a little while to get used to. Believe me, that took a little while to get used to. But when you get over that and you realize you're just trading the chart, life's good. Life is good. All I trade is directional, calls and puts. And again, I just use the option to leverage my money. I don't know how many people here can, and I don't want to know, don't clutter up the chat, please. How many people can or cannot trade Netflix for $398 a share? I can't. I can't do that, but with an option, I can. And that's what's one of the cool things about it. I hope that answered your question. Let's see, Richard, how do you enter or sell with the gap ups or down and stops out of the range? You know, let's start with the bad news, Richard. Let's start with the bad news. The bad news being, let me find one here. Anyway, let's just look at this right here. So the bad news being, what do you do if it gaps down? To start with, do you know that I can count on one hand in a year's time how many stocks gap down on me? So I don't ever worry about it. I can count on one hand how many times I wake up in the morning and go, oh shit! I can count on one hand. So that's a non-issue to me. It just doesn't matter. If you concentrate and focus on charts and you don't do silly things like hold through earnings, if you pay attention to what the market is doing And if you're in time, that just doesn't happen. It just does not happen. Now, for the good news, if I'm in a stock and it gaps up, I take my money. Baba, case in point today. We were in Baba. Sold Baba for a very nice sum. Very nice sum. Gaps are gifts. Take your money. And what I did with Baba is I sold half this morning, and then I could see Baba was just not acting good, so I sold the other half. So gaps down, they just don't happen. Gaps up, they happen often. Take your money and walk away. Take your money and walk away. Good question. I hope that helped. Let's see. After 25 years, I only use those patterns and the M and W pattern. Johnny, that's funny you say that. You've got your time in. You've got your skins on your knees and elbows. You've been there. You've been there. And it's funny how that works. When we start out, when we first start out trading, think of it as a circle. And what we do as traders, we try to learn everything under the sun. Oh my God, we go to every free webinar in the world. Oh, Lord have mercy. We learn everything. And we put every indicator that anyone throws at us. You hear this stuff like, here's one of my favorites. I've got this secret candlestick signal that has just been uncovered. That's a load of baloney. There's no such thing. But as a new trader, we get it. Man, we add that to our charts. And then somebody comes out with this newfangled stochastics, maybe some RSI, maybe some MACD, maybe some ADX. It all kind of wraps around. It does all its thing there. What a bunch of baloney. But you know what we do? We put it on our charts. And then what happens is a couple years go by. 3 years, 10 years. Or Johnny, 25 years. I'm with you, Johnny. And you know what we realize? That all that is a bunch of hockey puck. It's all that is. That's just hockey puck. It does not mean a thing. Doug says it best when he says, price is king. That's what counts. Now, along with that, you put price in certain chart patterns. It's still price. The chart pattern is just price. You've got yourself a winning game. And all this stuff here means nothing. What Johnny says there, he uses the M and the W patterns. M being bearish, double being bullish. That's it. But it takes time to learn that. But when you get through all that hockey puck stuff, you'll get it. Hopefully, it won't take you 25 years. I mean, it takes time sometimes. It took me a while to figure it out. So anyway, thanks, Johnny. Well said. Good timing placement of that. Let's see, Daryl. Yeah, okay. I see what you're doing. Let's see. Doug, Malcolm is writing to Doug there. I come to believe that people will fight, claw, ignore, spite, anything that causes them to question their being right. Malcolm is writing that based on something Doug set up there. Will fight to be right. And both statements, absolutely wonderful. Thank you, Malcolm. Malcolm's the guy, by the way, that increased his entire count 29% 9 days. Well said. Regarding stops, Matt there, regarding stops, is it better to be bitten by a pesky mosquito or eaten by a hungry lion? Well said. Well said. Well said. Here, Ed, I'm going to read something, see if I can find it real quick here. Ed in the room, we were talking in the room today. He posted something here. And I thought this was amazing. Here, I'm going to see if I can. Well, I'll post it in there because I think everybody should write this down. I think everybody should put this. There you go. I just posted that there. So Options are just an accelerator pedal. If you can't steer, you're just going to run into the ditch faster. And if you can, and what he's meaning is if you can't steer the chart, all it's going to do is put you in the in the ditch faster. So learn to read the chart. Gwen, you're a hoot, Gwen. Thank you. Let's see, Malcolm, but I will take trade if only one triggers and conditions are, yeah. If yeah, Malcolm is he's just got his science down to a nice plan there. That's good. Let's see here, Paul. Great info, but have to run. Take care, Paul. Thank you for being here. Chris, Tesla has been a tear. Yes, Tesla has been. Darn it. You know, I traded Tesla a few times, puts over here, made some good money, and it's been ripping. It really has. I think now, you know, we've got a nice little wick up here. This gives us a shooting star. We just broke out of the 50-day simple. So, in all honesty, I would have to say Tesla might be looking for a little bit of a rest, and it might offer an entry on that rest. Remember the chart pattern that we like? Well, all you got to do is, for now, since we don't know exactly where it is, just take the top of that candle. Let's do that again. Just take the top of that candle and just draw it down about to here. Now what you want to do is wait for Tesla to set up in that box. There's your rally up. We want to wait for that consolidation. Let's see here. My tree. Darn it. My charts look like Christmas trees, meaning you have a lot of stuff on them, Chris. Is that what you mean? The secret. Let's see here. The secret is the price chart in front of us. Yeah, I've tried a bunch as well. Just trade trend, follow the trend. You're right, RC. You're right. It's a simple stuff. W day. Bullish. Yeah, that's a nice bullish W pattern. So here's a bullish W pattern if somebody doesn't know. We go from up here down to that low, up to that high, down to that low, and now we're up here, and here, right there, where it makes the bullish W pattern. See the W there? So now this becomes a trade over here. I'm not saying you can't trade down here, you can't trade this, you can't short it. You can. Absolutely you can. But once you get that bullish W pattern, what's that suggesting is that the bulls are winding up to move this higher. That's what it's suggesting. Not guaranteed, not guaranteed. And it doesn't mean that it can't come back and do a little bit of testing. For instance, I would look at that pivot low as a possible test, but yet wouldn't it break down below that high? Yeah, it would. So I might look at that as a possible test. And then we might start looking for some reasons to be a buyer in here. And now we've got a nice chart set up. But yeah, W day is a great looking bullish W pattern. Somebody might be thinking or wanting to type, aren't you afraid of the 50-day simple? No, I'm not. And if you are, there you go. Just take it off. Look, I respect the 50. Don't get me wrong. That's why I have it up there. But I'm not afraid of it. You know, I've come to believe that, I don't know what percentage. I mean, I don't know that you can actually put a percentage on it. Maybe it's even 100% of trading is just common sense. Is just common sense. So things like this, if the, where's the chart? Oh, over here. If every stock failed the 50-day simple, and it continued to do that, pretty quick, this $157 stock would be a buck. Pretty quick, all stocks would be a buck, and then all stocks would be zero, and then we'd have no stock market. So am I afraid of the 50? No, not at all. Not at all. Is it a place that I exert some concern? Yes, Absolutely. But I'm not afraid of it. Let's see here. WDA Malcolm. There we are, Malcolm. Thank you. Let's see. Our work. What is the best way to learn more about your scanner? Truthfully, is to get it. It's if you're a member, you can get it for $97 a month. Sign up for a trial. If you're not a member, you get it for $97 a month. For 97 bucks, you want to test drive a Ferrari? There you go. That's what I would do. It's only $97. Let's see. Shaq, yeah, look at that. That's a nice one. There's your bullish W pattern right there. You can see we've broken out. Now we start looking for that trade right here. So now we might, you might like that next bullish candle that comes up. You might let it get bullish and then pull back. I mean, when you're looking at this, charts like this, when you break out of a chart pattern, what you want to do is go in here and put some lines up at places that may cause a little grief. And I'm going to do that. And then we'll put up there, right? So if you wait and let it pull up here and test maybe, or it's not like your line in the sand is up here. It's not like this is your line in the sand. I mean, if you could buy this chart up here at 53.90, in fact, you've not missed anything. We still have other targets for it. A trend is a trend is a trend, and it's going to stay a trend till it's no longer. So, I see charts like this. I don't have to rush into it. I just have to wait patiently till it comes to the chart pattern that I want to see. For instance, I want to see a chart that's in the trap. Oh, it is in the trap. What do you know? And you can clearly see we break out. This is resistance right now. Let it break out support. Let it test, become support. You can be a buyer. Targets up there. Life is good. That's a nice chart. Has earnings next month, so there's plenty of time. Yeah, thanks, Evelyn. Brocco, yeah, we're running out of time, but I don't want to get in the weeds on this. And honestly, this is one of these things that I got to tell you, it's not important. I've discovered that the important part is the chart. Granted, if you don't know, then it's troublesome. But all we have to do is it's real easy. So let's take Baba. And honestly, as I speak to you right now, I don't know exactly what Delta I bought it at or anything. That's said and done. I'd have to dig through the files and get all that. But let's trade it as if we're going to trade it today. All right. So the first thing I'm going to do is go out to 50 days plus. So there's nothing there. So I'm going to go 66 days out. I'm going to come down here and I'm going to look for open interest first. And there's plenty. Good. I'm done with that part. Now let's go over here to the Delta. And in all honesty, Delta to me is like yellow. There we go. I think the sweet spot whoops, that's not what I wanted. Let's try that again. I want that green right there. Green, there we go. The sweet spot is around that 72. But is there anything wrong with taking a 60? Is there anything wrong with that? No, I do not believe there is. And I've tested this. I've proved it to myself. There's nothing wrong with that. I've even done things and come down here and said, you know what? I'm just not going to pay $20.70. So I've even come in here. I've done something like that. Is there anything wrong with that? No. To me, there's not. Don't let this confuse. Don't let this get in the way of making money. All right, it really, you shouldn't. Um, to answer your question straight up without anything, you know, go at least 50 days out. 100 is fine. Look for around that 70, 72 is fine. 77 is okay. 66 is okay. And there you go. That's it. And I swear to you, that's all I do, and nothing more. That's it. Let's look at another one. What is this? Let's take this stock right here. All right. So let's assume that we think this is the great buy. So let's go take a look at it. GTTG TX. There we go. All right. So again, I'm going to go out. There's 60 days. That's closest thing I've got to 50. I'm going to look for open interest, and there's not enough in there for me. August, there's not enough. November, there's not enough. What I'm going to do is go back to that 66, and I'm just going to take, for instance, this one just because it's a high number. 76 delta, there's nothing wrong with that. So now what I'm going to do is I'm just going to click on this, and I'm going to bring something else down for you. Let me bring it down here. There you go. Soon as I clicked on this, it filled in the ticket. See that number right there? That means there's 57.89% between the bid and the ask. That's a no deal. We're not going to do that. So I want to keep this under 10, preferably under 5, preferably under 2% or less. So if it's 10, I damn well better want that stock. I better have a good reason for wanting it. 5, okay, I'll take 5 all day long. I love 2 and love less. That's it in a nutshell. That really, really is it in a nutshell. No secret. The secret is in the chart. Secret is in the chart. Bracco, did that help? Chandra, any inputs on what screener criteria you use for the given 60? Chandra, do you have the scanner? And I'll look for your answer down below in a minute. And then we're going to shut her down here in just a couple minutes, okay? Let's see. Kimberly, WDA options are extremely expensive. Okay. Let's see. No stock market. Wow. No stock market. Wow. RC, I'm not sure what you're saying there. You use the 17 and 34. Yes, I do. When do you decide on which one has more weight? You know, I don't know. I don't know how to say that, John. I don't know how to put that into an answer. I think the best answer is maybe go see what the market is doing. Go see what the market is doing. And if we just look at this chart right here, doesn't matter if you have any other chart moving averages up there. If you just look at that chart, just look at the don't worry about the red and green dots. That's just the 17. But if you would just look at the trap, does it matter? I mean, does any of that matter? And that's where we get to that circle, and everybody wants all this stuff. Tonight is a good example. Does anything I have on the chart matter? No, it really doesn't. What you have on the chart, just make it work. Now, I happen to like this, and if you want this, you can certainly have this. Just make it work. But having the 34 or having the 50 or having the 200 or having all this stuff doesn't matter. So I have 6 monitors, and over to my right, which that looks left to me, but that is right. Over to my right is 2 other monitors. You're on my, right here is my lower center monitor. And to my right, 2 monitors stacked up. And on those monitors, I have different charts. So it doesn't matter. I can click on whatever ticker symbol I want to, and it changes those charts that have the 200 on it. One is the 15 minute, So I'm able to see at a glance somewhere else without messing up my main chart. But the truth of it is, doesn't matter. And and I don't mean to sound so, I don't know, cavalier about it maybe, or something. It just we put too much into that stuff. We really do. Um, I started using the 20 and 50. Why? Because that's where the market was. That's all. And that's just because I sit in front of the computer and I study charts. And I just saw, hey, look where the market is. So you know what? I'm gonna look at that. I'm gonna put a trap within a trap, is what I'm gonna do. Because I know that the market moves from major moving average to major moving average within some space. It doesn't, I'm not trying to say it moves exactly from one moving average to another one, but it does tend to move from one major moving average to another major moving average. So if we break out of the 20, the next major moving average, in my mind anyway, is the 50. Now, is the 34 in here? Of course it is. Of course it is. Does that have concern? Am I concerned with that? No. Because I'm trading price. All I want is charts in this area that meet this criteria. And after that, I'm going to trade price, is all I'm going to trade. So anyway, thank you for the question. Seriously, and I hope that made sense. Keep your charts simple. Keep your charts simple, and stick with one thing at a time. Just like this right here. This is, I mean, just look at these charts. All 63 I put out there. They're all in this area right here. Some of them are going to be over the 50, which I think is good. I mean, look at that. They're all the same chart setup. I can't tell you which one is gonna pop tomorrow. I can't tell you that. I don't know. I really don't know. And the way I trade, is I've got the scanner that alerts me that, I mean, it might alert me 19 different stocks here that are doing the same thing. But I know that BABA is one that we tend to follow sometimes, and BABA is doing everything we needed it to do. It's not that I knew that this was going to gap up. I did not. Had no clue. It just put in a bullish candle inside the trap. Okay, I'm going to take the risk, knowing that if it closes down below, I'm out. That's the riskiest part of trading to me, is you've got to make that decision somewhere. It could have been Baba. It could have been Lily. I don't know. It could have been, could have been Google. Could have been, anything. So anyway, thank you. I hope that helped a little. We need the stock market. I wouldn't know what to do with my day. Excuse me. You and me too, RC. The news is telling me the world is in trouble. Stock market is telling me that everything is great until it's not. Until it's not. Folks, Malcolm. Folks, I've been trading 29 years in 9 days. Congratulations and happy birthday. All of them have come from the LTA scans. I've traded no other patterns, just the 4. I've made over 5 figures. Nice. And paid $97 for the use of the scanner with free technical support at a phone call. My goodness, a check and a steak dinner for you. You just have to ask yourself one question. Can you do math? Thank you, Malcolm. Thank you. Very kind of you. Any script for Thinkorswim to visualize the earnings date on the charts? Any script for Thinkorswim to visualize the earning? Oh, yeah. I think there is, William. I don't use Thinkorswim. But I do think, because I know a lot of people with hit, run, candlesticks, and right way options use Thinkorswim, and I'm pretty sure, yeah. SK. All right, let's call it. After Stella, I'm gonna call it quits. So, well, whoops, that's not it. SWKS. I looked at that one today. What did I decide? Yeah, I looked at that one today, and I think that's a pretty darn good looking chart myself. Um, it's let's put a line up right here. So based on this chart, I think it looks absolutely wonderful. We've gone a low to a high to a higher low. Looks like we're breaking out into those highs. So what I'm going to do is come up here and put a line at some peaks. We're going to put some at some valleys right there. And then I'm going to put a line up here. Now, I don't live and die by these lines, just so you know. I really don't. Why are they there? Because most everybody wants them, is why. The truth of it is, now we're going to follow price. These lines are great for a reminder that if we have a sell signal and we're at resistance, 2 plus 2 equals 4. Common sense says maybe you shouldn't be there. For me, I trade with goals. So if I was to buy this and it met my goal and I was at 102.99, I would probably be taking some money off the table. If it was in the middle of the day, I might watch it and see if I can't, who can win the staring game, the stock or me, to see if it goes up higher. Now let's go look at this chart. Where do we set on the bigger picture? At the 50, I'm not afraid of the 50, but I'm certainly not going to be a fool. I want to know that the 50 is there, so I just might put a line right there. In case I go to a different chart, then at least I know there's something there that I can go look at. So right now, honestly, I think that's a good looking chart. I do think that we want to make sure that it has some follow through. Right now it's doing everything perfect. I love what it's doing. And also nice volume today. So anyway, great chart. And yes, in the buy zone. I guess that's what you actually asked. Let's see, Kimberly, do you still buy if BA is 40 cents or more wide? 40. I'm not sure what BA is, and yeah, I'm not sure, Kimberly. I'm not sure what you're saying there. Let's see here. All right, let's call it a night, or it's just going to get too late. No, Kimberly, I don't buy if it's bid and ask. Okay, sorry. I guess I should have known that. No, I don't. Actually, I never have. I think I've done that by mistake once or twice, but not on purpose, so no. All right, everyone, have a wonderful, wonderful evening. Thank you very, very, very much for being here. I appreciate it. Let me know on that list. Email me if that list works for you. If you make some money somewhere, just give me a shout. If you like that sort of thing, we can do that down the road as well. Everyone have a wonderful night, and we'll see you all tomorrow morning. Take care, good trading, and be safe.